April 14th, 2024. Some people asked to see my markup of the chart. This was mine for Friday. I did it today. It's not very detailed. I was feeling pretty lazy this morning, but this is the review for April 12th. We had open gaps. You can see we had an open gap here and an open gap here. I'm going to change it to the other chart, so just pause it if you want to see that. We had an open gap here. You can see with the breakout point, the open of the day, the one open, and then the close of bar 10, which did not overlap. And there was another one that was a lot more subtle, but you can see the close of bar 8 and bar 9, and the open of bar 9 did not overlap with 28 close, which really just means on a line chart, we have open gaps, as you can see. And those open gaps are trapped traders on the line chart. So the traders who bought this low, they scaled in, they were never let out. So that means that there's trapped traders and you can drive the market down. Bar 1, a bull bar, but a big tail on the top, a big tail on the bottom. Not really good for either side. My initial thought coming in today was that, we've had a big gap down, but this was a strong bull trend day. So there would probably be buyers somewhere in here. I thought that we were going to end up getting some sort of reversal up. I did not think this was all that likely, but did end up happening. One of the reasons I didn't think it was all that likely was because of the daily chart. You can see we were selling off below the prior day's low, and we were within a trading range. So I just didn't think it was all that likely that we were going to get a strong breakout below a trading range in that context. Especially because, we've been so bullish. I'm going to head back to the chart for a second, actually. We've been so bullish over this. It just didn't seem likely we were just going to get some strong breakout to the downside. I thought we were going to be more sideways, and it seems like we're forming the bottom of this trading range. So I thought any breakout was probably just going to fail. Bull bar on bar 1, but a big tail on the top, tail on the bottom. Inside bar 2. High 1 for the bulls, possible low of the day, but I would rather wait and see what happens. Seems like a better bar to buy below than to buy above. Doji bar 3, probably buyers below, probably sellers above. Bar 4, big tail on the top, but not as good as it could be. 4-ball micro channel for the bulls, and it's a low 1 short for the bears after the big gap down, looking for a second leg down, but I would rather wait. Bar 5 essentially tests the 2 close, which is the start of the channel. So spike bar 1, channel 2, 3, 4, and we're testing the start of the channel on bar 5. Bar 6 is a high 1, good bull bar, but I think you're buying at the top of a tight trading range 2 through 6 if you're buying. Luckily, if you tried to buy, you were never triggered. So you can see we ended up getting a big surprise bar down, bar 7 and 8. We're probably always in short from bar 7 and 8, but I think that probably going to get a second leg down, but not go all that much lower. 9, an inside bar, a low 1 short for the bears. Not as good as it could be. You wanted a bear bar if you were a bear and you got a bull bar. So pull back, buyers below, pen, and outside up. 11, a bear bar, a low 1 short, but I think I would rather just wait and see what happens. I think that, you can sell 11, but because it's always in short from the gap and from 7 and 8, but what happened is basically the peak of what you want to happen, right? It's not going to get much better than exactly what happened. So if you sold below 11, this was, you're probably only going to win that trade, I don't know, 30% of the time, maybe 40, but maybe 35, right? But this is probably the best case scenario for you. Fall through 12, 13, 14, 15, 16. Sell the close 12, 13, 14. Bear bars closing near their lows. It's always in short. 15, kind of a disappointing bar. I went sell, and 16 is an inside bar, probably buyers below, probably sellers above. The reason there's probably buyers below, I wouldn't buy below, but the reason there are is probably it could be a final flag. Inside bars, latent bear trends tend to be final flags. Reversal up 17, potential low of the day. I think it's similar to buying above this II. The context was better here, I think, but it's a similar idea. If you're buying above this, you're not getting out below 18. You're buying, you're putting a stop low here, and you're just waiting. 19, big outside up bar. Bad low 1 on 18. We probably need a couple legs sideways to up. We've had a few pushes down, so I wouldn't really be looking to sell until we get to the moving average. 20, a low 2 short, but really not all that good. And you can see 21 tested the 19 close. 22, a big bull bar closing near its high, but big tail on the top, inside bar 23. Bull bar 24, follow through 25, but I don't want to buy 25 or 24. You're buying too close to the moving average, and we haven't really tested it yet today. 26 is a potential wedge, 19, 22, and 26. But if you're selling after a tight channel from 18 to 26 or 17 to 26. So I think better to realize that the market's going to go sideways first. So similar, situation. If you're buying above 17, you can't exit below 18. I think if you're selling below 26, it's pretty counterproductive to exit above 27. And then you get 28, and the second reversal down 29, 30. Okay, sell below 30, inside bar low 1. second reversal down from the moving average, follow through 31, 32, and then surprise bar down 33, follow through 34. Probably bears will probably exit above 35, and you can just sell again below 35 or below 36 and follow through 37, 38, 39. I don't think bears have to exit again until 45, really. You can sell pretty much, you can sell the close of any of these bars. These are good days for stop order traders because, it's one of those days where you consistently think the market's not going to keep going down, but you keep getting the bear bars, so you just keep selling them as an always in trader, and you should do pretty well on this day. So I think bears will get out above 44. If you don't, it kind of traps you out. You can see if you didn't get out above 44, it's possible a trader would put their stop above 39, betting that it's the top of the channel. And you can see 46 traded to the top of that channel and stop those traders out and then reverse down. So we have a lot of traders trapped out. So someone might sell below 46, hoping to get big follow through like they do, 47, 48, 49. 50 is a wedge, 1, 17, 50, and 2 legs up to the moving average. I wouldn't sell 53 or 54 if this was too strong. It was probably going to get a second leg up. So I would rather wait for a second reversal down, 57, 58, 57, 59. I personally, thought waiting for 59 was better. You could sell 57, but I just think that it made more sense to wait for follow through since this was a surprise bar and it might get a second leg. And 59 was, enough to clearly make all the bulls exit. And then, again, since we were relatively low in the range overall, it was reasonable to expect there might be some sort of bounce late in the day, since it's probably towards the bottom of a trading range overall, and we might get some sort of short covering rally. And that's essentially what this was. I know I'm skipping through this day a lot. It's just Sunday and I'm really just being lazy. And so I'm a lot more active Saturday mornings than I am on Sunday mornings with work. Anyways, stop orders. I thought, if you wanna, 11, 12 is better, 13, maybe sell the close 14. You can buy above 17. I wouldn't sell 18 or 20. You can probably sell 26 and sit through the pullback. You can sell 30, 33, 34, 36, 42, 39, 46, and you could probably buy above 50 wedge, but thought it was better to focus on selling. And then you can sell again 59. On the daily chart, like I said, I'm expecting buyers in this area. I think, I'd be surprised if we got some sort of strong follow through day tomorrow. I think most likely if we get down here, there's going to be buyers and a reversal up. We are searching for the bottom of the range, but I think we'll find it pretty soon. Weekly chart, it could be this bar, right? If you take a look at it, down and then up on it and then back down on this bar. So potentially one pullback, two-legged correction. I'll be interested to see if bears can get a third bear bar. If bears can get a third bear bar, that will change the kind of complexion of this whole thing, I think. Because if you get a 2-bar pullback, a lot of times a 2-bar pullback is okay for the bulls and they'll continue buying. This is pretty overextended. They're probably not going to buy all the way up anymore. But I just think that, we might vacuum down to 5,000. It's possible that, it's not very likely, but it's possible we just get a sell vacuum test of 5,000 next week. But if bears get a third bear bar, usually traders don't like to buy after a 3-bar pullback. They only like to buy after a 2-bar pullback. So you can see we got through this rally, 2-bar pullback, 1-bar, and then 3-bar pullback, and then a trading range formed in a much deeper correction. So I'll be interested to see if this is a bear close. And yeah, that's going to be the day.